Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, bringing us information and education on important financial, investment, and retirement planning topics each and every week. Tim, no exception this week. I will say an important topic is actually not that great for many of us, and that is inflation. And we've got a lot to talk about.
Peter, thanks for having me. And I'm glad to be here to talk about inflation because it is affecting my clients, prospects that have come in to see us, people who are attending our classes. And, let's dive into it because it's very, very important what it's doing to people who are pre-retirees or definitely retired.
Yeah. And in fact, Tim, just kind of talking about how inflation really does impact us. During our working years, obviously, there is an effect. There is an impact. Inflation is painful. But in retirement, it can be even more so. Those impacts are exaggerated exponentially.
Well, and, when you're working, if there's inflation, it doesn't feel great by any stretch, but you're hopefully getting a raise that is going to keep you at pace with that, right? Well, if you're retired, the money that you have is kind of what you have, right? And then you add on top of that the market is going down. And that's just a double quandary right there that you're like, what am I going to do? I don't have enough money to buy what I wanted. And now I'm losing money in my portfolio. So what do I do? It's a very challenging thing for retirees.
We are going to be talking about 5 ways that inflation is changing retirement planning. And in most cases, ladies and gentlemen, this is not for the positive, but with a plan in place, that Protect and Grow written retirement income plan, you can make sure that you are prepared for the potential impacts and realities of inflation. And that is why Tim Stearns is here each and every week providing informational education on these important topics, but also the real value of the program, giving you the opportunity to do some proactive planning and making sure that you've got that Protect and Grow plan for your retirement, the proprietary planning process available there at TJ Stearns. If you would like to take advantage of the time and opportunity to sit down and do a review, assessment, analysis, and strategy session with a certified financial planning professional, pick up the phone and give Tim Stearns, CFP, a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim, to start with, number 1 on your list here is, and maybe this is the silver lining in all of this, people are realizing that maybe we need to save more.
Well, yes, you're going to have to save more if things are going to cost more in retirement, right? That seems really simple, but people have to really think about it, right? So one of the analogies I always use in my retirement classes that we have throughout Chicagoland is the example of, and we have the 1976 catalog from Sears, and then there you can buy 4 tires for $200 installed. Okay. So the analogy I used to use is about a year and a half ago, I bought tires for my son, TJ, and that was $900 for those tires. Well, we just had a person in class correct me and said, you're not going to believe this. I went to Costco and I paid $1,200 for the same type 4 tires. So there's a perfect example of why we need to save more because things are costing more. And we know that, and that, you have to make an effort, a deliberate effort to save more.
And Tim, some prices are beginning to show some easing. I know lumber and some construction material costs have begun to come back down, not to pre-COVID levels by any stretch, but the prices that we seem to be paying each and every day for things in the grocery store and at the gas pump haven't really shown a whole lot of signs of easing.
No, I mean, and, the analogy that you always use is that, a bull market takes the stairs, a bear market takes the elevator. That's how I feel like gas prices are. The minute OPEC makes a move, man, those gas prices are up the next day. But coming down, not so much. And it takes a while for them to kind of settle back to where they really should be. And when they announced that 2 million gallons a day, 2 million barrels a day that they were going to cut in production, I know around here in Chicagoland, the rates went up right away, the gas pump. So we need to be wary of that and wary of the fact that, we're going to need more money because things cost more.
Well, that is setting in with many in the American public. According to 401k Specialist magazine, 41% of those 18 to 24 and 33% of those ages 25 to 34 say they are now trying to save more for retirement, mostly in those 401ks. Now, this particular source broke that down by gender as well. Good news, more women, in fact, doing a better job of this than us men, Tim.
Well, maybe they can stay more disciplined. Men have a chance, have an availability of being wandering, our thoughts.
We need our focus needs more focus.
Yes, that's a true story. So that's good to hear that. The thing that I found unsettling is that Go Banking Rates survey said that 3/4 of Americans have said that the inflation's affecting their retirements. So now what? It's hurting 75% of the population. So we have to look at different ways to do better.
Inflation obviously could impact retirement, but if we've got that plan in place that actually proactively includes and accounts for some amount of inflation, hopefully we can still remain more confident on an ongoing basis doing those things that we envisioned retirement to be about.
Well, how are you going to be confident if you don't have a plan? And 1 out of 10 Americans don't have a plan. One of the analogies I always use in class is I'll say to somebody, hey, I'm a general contractor. I'm going to redo your house. And I ask them, what would you want from me? And they say, well, we want, some referrals, some plans, blueprints, and then, of course, your cost. And I say to them, no, we're just going to wing it. And I ask, would you hire me? And everyone laughs in the class. No way. But I'm seeing that Americans are doing that, and now, that's fine and good in a bull market, right? We had a 13-year nice run. So you could throw money at the market and make it, right? And that's great. Well, now is where you find out who the true stalwarts are, the guys that can actually pick stocks and not pick stocks. And, the bonds are down 14% all the way to 36% for the NASDAQ. That's your range. So if you have a plan, great, you can stick to it. But if you don't have a plan, now is the time to do that. So that's another reason to have one.
Again, if you would like to put that Protect and Grow plan together, pick up the phone, give Tim Stearns, CFP, a call, 800-640-2256. That's 800-640-2256. Tim, with the normal retirement age, maybe somewhere in a range of 60 to 65, retirements are easily lasting 30 years or more. Imagine flashing back to 1990 or 1995 and retiring at that time without a plan for increases in cost of living, the increased prices that we're paying for the active lifestyle that we envision retirement to be about.
Well, that is scary. And back then you might have had a shot at having a pension, right? And nowadays we're just digging money out of our assets. We are net sellers of assets as Americans when we go into retirement. The money that I have in my IRAs, my Roths, what have you, the day that I retire is going to be the amount of money I have. The only growth I'll have is the stock market. And the market right now for early retirees, that market has not cooperated with that. So we need to be careful. And that's why I'm seeing a lot of people delay retirement.
Number two on your list of how inflation is impacting retirement.
Right. Delaying retirement, or how about this? A lot of people, we call it the great resignation during COVID, people saying, I'm not going to go to work anymore. So, and now they're thinking about going back because inflation, it's tougher at the gas pump. Everything's more expensive. So delaying retirement is a thing that we're working with people. The good news is if people have worked with us, for a plan, they're dynamic and they're flexible. So we can look at what those numbers look like if they're going to go early or if they're going to stay to the plan or if they want to go later. Obviously later is better, but having to rethink retirement that's scary that you have to do that. But those are the times that we're in, and you need to be, head on a swivel right now.
Recent survey of 55 to 64-year-olds, Tim, 1 in 5, 19%, said that they were or planning on delaying their retirement plans due to inflation.
Right. Yep. And I'm seeing that a ton, that people come into our office saying stuff like, I don't think I have enough money, and then, you look at someone who has, a married couple has a 1 in 4 chance of one of them living to be in their 90s. If I'm in my late 50s and I'm getting ready to retire, boy, oh boy, do I need to make sure that money lasts. And, if I don't have a pension, how do I do that? Social Security, I asked this the other day. I asked, how much do you think Social Security was supposed to be when it came out for the typical American? And the right answer is 40%. I had a couple people in the class say all of it, and you're seeing people who, they're not retiring because they don't have enough money. And Social Security is not going to carry the day when you're in retirement.
Tim, do you see that discussion of delaying retirement, that consideration is compounded because of the impacts of market volatility as well?
Yeah, absolutely. You have to pay more and you have less money in your portfolio. If I'm retired, I'm very skittish right now. I'm hearing people, I go to the gym and stuff like that. I hear people saying, we're not going to do that trip anymore. Didn't realize this was going to cost that much. These are the things that we're trying to help people get through. If you don't have a plan, you certainly do have a plan. That is hopefully hope for the best. And we always talk about this in class that, on this radio show, we deal with the KNOW, knowledge that you have enough money to make it through retirement.
Again, talking with Tim Stearns, CFP, about the impacts of inflation on our financial, our investment, on our retirement planning progress. And if you've got questions or concerns about your own individual situation and your plan, how your investments and retirement accounts are working to help you achieve and accomplish your goals on your timeline, pick up the phone and give Tim Stearns, CFP, a call for that complimentary review, that retirement planning strategy session, your Protect and Grow written retirement income plan. 800-640-2256. That's 800-640-2256. 800-640-2256. Either due to the inflation, Tim, or the market volatility, number 3 on your list of the impacts to retirement, many savers and investors talking about making a change to their investment strategy. Is this prudent, and what should we consider if so?
They're making changes because they're realizing that not only is the market volatile, but they're also realizing that they need to retain their gain, right? So I think it's definitely something to look at. What we're seeing is people are moving the chairs around on the Titanic. Bonds are losing and stocks, and they're staying in mutual funds. That's why we're glad to say that we have institutional investing that has stop losses in it. I hear the misnomer that you have to be right twice out there. I don't agree with that either. The companies that we use have been around since the late 80s, and this has carried the day. I see it in my own personal portfolio. My mother's, who's 92 years old, you get the idea. We put our money where our mouth is, literally using tried and true strategies that don't lose money as terribly as the market has done.
Now, Tim, when there are significant market movements like what we have seen, does that give an indication that there is some amount of change in investment strategy or adjustment that should be done anyway, even if it is just routine rebalancing?
Well, we were seeing when people were coming in here in 2021, especially even at the tail end, is they were, their stocks had taken over where their bonds should have been. So they were trying to basically, capitalize on an up market and not rebalancing. And now, the horses are out of the barn, their stocks have taken a hit, and they're trying to look around going, what's safe, And at the end of the day, what you need to do is be more cognizant of the fact that what you own is what is going to tell you what you're going to make in the market or lose. And when the market does rally back. And I think it's going to be a bit, because you're looking around at the Fed saying, they are saying publicly that they are going to raise rates more. That does not bode well for NASDAQ type stocks, to even down to the Dow Jones type stocks. So what are you going to do differently? The definition of insanity is doing the same thing over and over again, expecting different results. I see many investors still doing that, and now they're like, oh shoot, I should have done, shoulda, coulda, would have. Well, give us a call and see what we can help you with. We have better plans in place. We can get you a plan that will carry you through a 20+ year retirement.
And there are some specific aspects of that protect and grow written retirement income plan, Tim, that are going to help to address some of these factors of inflation and market volatility. Can you speak to those different choices and options and strategies in the protect and grow plan that most savers and investors do not have as a component of their current investment strategy?
So when I first got into the stock market in 1994, stocks went up, bonds went down. That's how it worked. Nowadays, since about 2008, stocks and bonds have been working in concert going down, and that's a problem. So and that being said, when people come to see us and they want us to analyze their portfolios, they have all these correlated assets, stocks and bonds. And so when they go down, what are you going to do? You have to hope for the best. So I'm talking about some uncorrelated assets, whether those be fixed index annuities, multi-year guaranteed annuities that can take the place of a CD and have better rates than them. Things that are uncorrelated to the, how are you going to hedge what the stocks and bonds are going to do? There's a lot of different vehicles out there that are not correlated to what's going on in the stock market.
Again, we are talking with Tim Stearns, CFP. If you've got questions or concerns, if you'd like to take a look at your portfolio, see what it's doing, analyze the positions that you hold, your investments, your retirement accounts, and see how they are working toward helping you achieve your goal, or if there can be any improvement in the way the portfolio is structured with that protect and grow plan. Pick up the phone and give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Number 4, Tim, on your list of the way that inflation is impacting retirement, unfortunately, it may be unretirement. There are more retirees now going back to work or working in retirement. That's not what we have traditionally considered to be a retirement.
You're seeing a lot of people, we had the big resignation, right? During the pandemic, people leaving the workforce, they didn't want to deal with things anymore, or companies were getting rid of people. Well, now we're seeing people who are actually wanting to return because they're fearful that now they has their stock portfolio taking a hit, but inflation has kicked in. And so they might not have enough money. And the last thing you want to realize is in your late 70s, early 80s that, wow, I shouldn't have retired 2 years early, what have you. Yes, we're seeing a lot of people who are returning back to work. And then you have about 8% of Americans are planning to work in retirement. It wasn't that much before, so again, if you have a 1 in 4 chance of living to in your 90s, if you're married, those are really tough statistics to just shut it down early. And with inflation being there, something to think about.
I didn't realize this, but Transamerica actually has a Center for Retirement Studies, and recent research out of that Center for Retirement Studies found that almost 6 in 10 Americans do plan to work at least part-time in retirement, and that was an uptick, Tim, of 14% compared to before the pandemic.
We use the Transamerica Center for Retirement Studies and all the time in our classes. And they have great facts, and those are scary. Those are very interesting to see that people are actually wanting to go back to, that they're saying, I'm going to work in retirement because I'm fearful that I don't have enough. Why is that? Most of the time, I would say it's because they don't have a pension. And then the other part is that they don't have a plan. They kind of went into retirement hoping for the best. A lot of times I'll hear from somebody who is in their early 60s, if they're going to retire, they got to figure out how to get health insurance until they get eligible for Medicare, which again, we help people with Medicare here too. They say, oh, I'm going to try on Social Security early. Well, again, we help people with Social Security too. So if you have questions out there, whether you should be doing this, that, or the other thing, give us a call and we'll walk through the process with you. There's no obligation, but at least knowledge is power.
Again, 800-640-2256, the number to reach TJ Stearns Inc., Tim Stearns CFP, your resource Chicagoland for proactive guidance in saving, investing, and retirement planning, and home of the Protect and Grow Written Retirement Income Plan. If you would like that written retirement income plan that details the order of operations and how to create income, shows you how to maximize and optimize your available sources of income, such as pensions and Social Security, and then efficiently generate the rest of the income that you will need to fill the gap and meet your living expenses, taking into account taxation, inflation, market volatility, and many other factors, and giving you a written plan that you can count and rely on. Pick up the phone and give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. And nearly 1 in 4 workers, Tim, 24% expect to retire later than planned because of the pandemic. So a moving target for that retirement date due to the conditions that we have seen. We've got to have a plan in place, and the benefits of having that plan, not that it can't change or adjust, but that you have something that you can refer back to, and the relationship with an experienced, qualified professional to help you understand if you need to make adjustments to that plan. Again, that's what Tim Stearns CFP is here for, ladies and gentlemen. Give a call, 800-640-2256. Finally on your list, Tim, number 5 of the impacts and the ways that inflation is changing retirement planning, moving somewhere cheaper. This actually has a lot of people considering where they want to locate retirement.
What we're seeing is, with Illinois being sometimes a myriad of problems in our government, our conversations in our conference room here are, I'd say 6 out of 10 are people getting out of the state. We're leaving in droves because they want to go somewhere that the government's not so screwed up, or they want to go to somewhere that there's not income tax on IRAs and that type of thing. There isn't right now in Illinois, but people feel like that could happen, right? So we're also seeing, people just saying they've had enough and, going to Wisconsin, warmer weather, what have you. So, yeah, it's interesting to me to see people wanting to get out of here, but that conversation happens a lot. 5% of Americans are planning to relocate. So this isn't surprising. It's happening in Illinois as well.
I'm sorry for interrupting there, but is this preventative for working with an advisor at all? If I set up that Protect and Grow plan here while I'm working or getting ready, and then do decide in a few years to relocate, is that going to be any kind of problem?
No, not at all. We've had 2 clients in just the last two months who went down to, each went to Florida, and it's just seamless. We can Zoom with them. We also have an office down there in the Tampa area, so that's not a problem either. We also have one in Scottsdale, Arizona. So if people need to meet with us, we're always, they can reach us on the phone. They can also see us in person. And then, of course, we can do Zooms.
Well, if you would like to set up a conversation, a consultation with a certified financial planning professional, Tim Stearns, CFP, here and available for you, ladies and gentlemen. That is the Protect and Grow Written Retirement Income Plan, the complimentary review and retirement planning analysis, available as an extension of the information and education provided here on this radio program. So if you would like to take advantage, pick up the phone and give a call, 800-640-2256. That's 800-640-2256. 800-640-2256. As a background to this conversation about inflation, Tim, the same survey from Go Banking Rates also pointed out that we probably weren't saving enough to begin with in the first place, even before inflation became a factor. Now, I know that there are some among us that do a fantastic job of building up a great amount of retirement wealth, but for most of us, we do need a reminder, maybe even a little bit more proactively, a little bit of prodding to do all we can to save as much as possible.
And that comes with having a plan. If you are short, then you need to put more money aside, right? And and a lot of people will not come to see us, and then they finally come in after years sometimes, and I'll say, "Why didn't you come in to see us?" And the one woman said, "Well, I was scared what you'd tell me." Well, I've said this before, and I'll say it again. We're much like going to the doctor. We're going to take a look at what your health is like, your financial health, and tell you what you need to do to change it. If you want to take those suggestions and run with it, I would do that. And we're happy to help people no matter what their circumstances are. But know what you know so that you don't go into something blindly like many Americans are.
And Tim, the traditional models for retirement planning have left a lot of potential obstacles and risks and things that are outside of our control. They're in the way of financial confidence. The Protect and Grow plan specifically addresses those issues, maximizing Social Security, minimizing taxes where possible, addressing and controlling risks, and most importantly, how to generate a sustainable, dependable, confident retirement income. If you would like to get that Protect and Grow plan, ladies and gentlemen, pick up the phone, give Tim Stearns, CFP, a call. No cost, no obligation. That is the offer as an extension of being a listener to this program. Give a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, always a pleasure. Thank you for always bringing up important topics of conversation here, food for thought, things that we need to be considering in our financial planning progress.
It was my pleasure, Peter. Thank you.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individual